We're about to go into banking reporting season. Chris, what are your expectations?
Look, certainly the banks have run quite hard into this current reporting season. Valuations are as high as we've seen in many, many years. We would expect that capital management will be a feature, with credit growth remaining fairly anemic, around 4 or 5%. The strong housing market will help some of these businesses. NAB's probably their least preferred at the moment, given their UK exposure. Westpac, on the other hand, have got strong potential for capital management. So, in terms of the outlook for the banks, that we're underweight, but certainly we think Westpac, in a relative sense, can outperform over the coming weeks around results season.
Okay. Tim, what are the big risks that you're looking at with the banks? What are you worried about?
Yeah, sure. I mean, ultimately the banks have a huge exposure to residential property, and it'd be naive not to think that residential property's at pretty high levels compared to what we've seen historically. So from that perspective, that's our major concern. We're also underweight the financial space as a whole, and the banks in particular, and that's largely on very long-term metrics where they look expensive on a price-to-book ratio. The flip side of that is obviously the dividend yields, and they're unlikely to be threatened in the near term. I suspect that's the main reason that you're not going to get a whole lot of selling from retail, especially coming into the dividend season. But for us, that's not enough to keep us in the stocks.
Okay. Chris, what are your expectations on the dividends?
Oh, they'll be strong, no doubt about it. Balance sheets are in great shape. The banks have delevered. Their funding mix has improved substantially in the last 4 or 5 years since the GFC. So certainly some of these banks, in particular within Westpac, have got a large amount of firepower to at least to pay an increasing stream of fully franked dividends over time, with the potential for special dividends.
Okay, and if you had to hold one, which one would it be?
We don't hold any at the moment. We're underweight, but if you had to pick one at the moment, it'd be Westpac.
Okay, Tim, you?
Yeah, if we had to pick one, it would probably still be NAB. It's the cheapest on valuation grounds, and we think there's opportunities for them to straighten out a few of their issues that they've had in the past.
Okay, there's a few thoughts ahead of banking season.